Alrighty. I have 4 o'clock and we will get started. So hello, everyone. We appreciate you taking the time to join us today. For those of you who have not met, my name is Natalie Layton, and I am the Vice President of Membership for the Long Beach Area Chamber of Commerce. Thank you for joining us today to learn about the Chamber's MEP partnership with Bryson. This is one of 2 webinars the Long Beach Area Chamber is hosting with Bryson this week. The next will be on Friday, June 11th at 10 a.m. We are excited to bring you this new member benefit to our membership, and today we will be reviewing what the MEP is and how you can utilize it for your own business. Before I introduce Trent Bryson, our featured speaker and CEO of Bryson, I wanted to go over some brief housekeeping. Please note that this event is being recorded and will be shared with the webinar's attendees, as well as made available on the Chamber's YouTube channel. If you have questions throughout the presentation, please use the Q&A function at the bottom of your screen, and Trent will answer them once the presentation has concluded. Now, it is my honor to introduce today's featured speaker, Trent Bryson, CEO of Bryson. Trent has established success as the head of one of Southern California's leading insurance brokerages and corporate retirement firms. After graduating from University of California at Santa Barbara, he began his career at Merrill Lynch. In 2001, Trent rejoined Bryson with a strategic plan to improve employee benefits consulting. Trent's vision and expertise have led him to regional and national awards and recognition. Alongside his career, Trent is an adjunct professor in human resources at California State University, Long Beach, an expert contributor on KTLA News, Fox Business, and Entrepreneur Media, officer for YPO-OC, and the Political Involvement Committee Chair for NAIFA California. So thank you so much, Trent, for being with us today. We're excited to learn more about the MEP and share this awesome member benefit with everyone's attendees. I'm going to pass it over to you.
Thanks, Natalie, and I appreciate everybody taking time to listen to us today. We are really excited. About 2 years ago, the whole retirement plan landscape changed. And with that, what it allowed for is something that's newer as part of the tax laws, which is a multiple employer plan that I'm going to walk through today. I'm going to walk through first a little bit about the multiple employer plan, and then the CalSavers plan that's coming through the state of California and kind of the differences between. So to start, what is a MEP? It's a retirement plan for businesses that typically have a common interest. All right, in this case, the common interest is the Long Beach Area Chamber of Commerce. So what they've done is provided this as they are the adopting member, and they're letting everybody join, or all the members of the chamber join their plan in what we call multiple employer plan. The great thing about it is you're part of a large conglomerate, so you get the economies of scale of being everything that a large plan would have, but at the same time, every single plan can be individualized. So as we go through it, just realize that while we're part of one plan, there's a lot of differences in the fact that you can have your plan set up however you want. And so as we go to the next screen, you're going to see kind of the main benefits of a MEP are the cost savings compared to an operating single plan. When you go to set up a plan, a lot of people think it's a lot of money, or some of the fees that are involved in the plan can be rather costly. In this situation, because of the scale of the chamber and the amount of members that will be adopting this plan, we're able to use some economies of scale there. The second biggest feature, which I think is probably the most significant, is the fiduciary and administrative support. A lot of times people have looked at plans or administering plans, and they just get so overwhelmed with the fiduciary and administrative support. So what we're doing in this is we've contracted with some partners that are actually taking that off of your plate as a plan sponsor. So it creates very minimal plan maintenance, like I said earlier, and at the same time, we still get that kind of customizable 401k plan design that a lot of people would want. And then for plans that have over 100 employees, if they have an audit today, they have reduced audit costs. So the audit only applies to those plans with over 100 employees. But if you do and you're paying audit costs today, what's nice about this plan is it's shared through all the audited members in the plan. So a typical audit can cost anywhere between $17,000 to $25,000. Imagine that being shared by 5 or 10 or 30 different people. So some pretty significant savings to the bottom line. As we go to the next slide, you're going to see, the administration, which a lot of times you're trying to figure out who's administering this plan. We contracted with a company called Transamerica, which most of you have probably heard. And what this does is we have Transamerica, we have a third-party administrator, then we have this, this MEP administration. And what this allows is for everybody in the chamber to have their own different plan. But it's all through Transamerica. So every time you would go through your website or look at your funds, it would be through Transamerica. So we have a large national carrier that's bringing this down to a very local level. And then Bryson, what we do is we come in and we support in terms of setup, the investments, and some of the other analysis that we'll get into a little bit later. As we go to the next slide, you're going to see kind of the roles and responsibilities. It's our job as a retirement plan advisor. So we're going to come in and we're going to support really for three things. On here, it talks about the retirement plan advisor. In that, we're sitting down with your employees, walking them through both in English and Spanish, why they want to be in a retirement plan, why it's important for them to save for retirement. And then we come back on an annual basis and a semi-annual basis and walk through some of that education component to it. The second is the 338, which is we take the fiduciary liability off of the employer's hands. A lot of times employers don't realize what kind of liability they have, or they've been, subject of a DOL audit and they realize just how cumbersome it can be. We take that off from the fiduciary side on your behalf, which is very helpful. And then I'd say that the final piece is we could support in the plan administration. A lot of times companies are coming to me from a human resource standpoint saying, how do I get more out of my people? How do we look at aligning our goals throughout our entire organization from the administrative assistant all the way to the CEO? And we feel like the retirement plan or profit sharing within retirement plans is probably the most efficient way to do so. And we've been helping plan sponsors do that for over 30 years now. But that would be really my strength, would be kind of creating that plan. The second was be Transamerica, which I talked a little bit about. They're the ones that are custodying the assets. So the assets are actually held at Transamerica. And they're also the record keeper. So that's where the website that your employees would be going and checking their balances. Benefit Equity Inc. is our current third-party administrator. Their job is to make sure that we're compliant with all the government filings. They can support us through some of the more complex plan designs. If you're looking at getting like a lot of times an employer will come to us and say, hey, that's great. I can get that $27,000 deduction, but what else can I do? If I want to get an even larger tax deduction, we can get in some creative plan design, and we've been able to get small employers up to $200,000-$300,000 a year in tax deductions for the employers. So it can be really attractive for small employers as well. And then the 316 plan administrative fiduciary, that's who's actually making sure that all the paperwork and all the administrative stuff is taken care of. This is something that's pretty new in the marketplace. A lot of times you'd get these emails sent to you, and maybe if you have a plan today, you continue to get burdened with a ton of emails. So you have no idea what you're supposed to give to the employees, what you're not supposed to. And MPPG is taking that off your plate so that, again, when we're talking about plan maintenance, we're really trying to reduce any of that administrative burden so you can focus on running your company, aligning your cultural goals with what you're trying to achieve, and running a successful business. As we get into the next slide, you're going to see really what we do, which I'm not going to spend a lot of time in because I kind of did in the summary. But what we're really basically doing is quarterbacking the whole process, from choosing the investments to walking employees through questions on investments, through helping employees roll in outside IRAs into the plan, to make sure that we're setting up the plan in a correct way, and then all the marketing and education to your employees. So we really become the quarterback, and then we interface with the other parties. And so you'll see on the next page, Transamerica, their main job is to provide the technology. So as the money comes out of the employees' paychecks and you send it over to Transamerica, they're the ones that allocate to the different accounts. That's where your statements come from. And I always think it's nice for employees to see a name brand with that, so that they understand that their money is being managed, or their money is being held in a large, national or international type company. And so Transamerica provides that for us. And then as you get into Benefit Equity, Benefit Equity is our local third-party administrator. So they're the ones that are preparing and maintaining the plan documents, and all the adopters, which as you as a plan and sponsor would be an adopter. They provide the annual compliance testing, which I could walk into once we start to set up your plan, the annual filings, and then some consulting like we talked about, where you may say, as an employer, we had a pretty good year. We want to do some creative stuff around tax deductions. How do we do so? And that's where they would come into play. And then MPPG, which I said is kind of the new relief, is they've figured out how to scalable provide all of that administrative support at a very low cost. And so rather than you having to do all these different administrative functions that are outside of your typical day-to-day, MPPG actually signs on as that liability, so that if they didn't provide that, it would actually go back to them. But it's their job to handle the reporting and the disclosure and all those type of issues that comes up. As we get into the pricing, what we really did is we priced everything as a $50 million plan, and then there's little different tiers. So what you're going to see is if you have a plan already in force, it's probably going to be less expensive. A lot of times, once we set up a plan, we'll go in and work with your employees to roll their IRAs into. A lot of times they'll have to go pay an additional 1% to be managed in an IRA or that sort of thing. You'll see this plan ramps down pretty quickly once we get above $1 million in assets. But that asset charge, that kind of includes, everything from an asset charge standpoint. And like I said, it's really priced as if it's a $50 million plan. Once we get the $50 million in, we're going to go back and reprice it again and continue as a conglomerate to come into this. I believe in it so much that I moved our own company in there to get the plan started. And when we looked at it as a side-by-side, as a small company, we get X amount of pricing. And now that we're in this MEP pricing, everybody gets that pricing. And so, we're in the business, and I've been really impressed with the pricing that we've been able to negotiate here with Transamerica, MPPG, and BEI. Now, what's the difference? A lot of people are hearing about CalSavers. So September 30th of 2020, businesses with over 100 employees had to start offering 401k plans. That may shock some of you if you have over 100 employees, but it's a very important number because from a compliance standpoint, it's something that was created by Newsom and the state of California that actually requires employers to do so. The next big deadline, June 30th, is right around the corner, and that's businesses with 50 and more employees. And so that becomes, you have to start to offer either a 401k or a CalSavers plan. And then June 30th of 2022, you're going to have to do it if you even have 5 employees. So it's something you're going to have to do one way or another. What's the difference between the two? Well, in the CalSavers plan, that says if you do not offer the 401k, you have to do something, which would be the CalSavers. Your employees only get to put in $6,000, including your employer and you as the employer, versus the plan-sponsored 401k, it's $19,500. And then if you're actually over age 50, you get an additional $6,500 in the plan. So you get to put a lot more in as an employee. There is no matching contribution option on the CalSavers plan. The plan-sponsored 401k, there is one. In fact, a lot of employers will go, hey, we're going to match these funds, but we're going to match these funds if we accomplish these 3 goals. And so one thing that I can help you is figure out what your goals are and back into those numbers so that really becomes a profit-sharing match. And that's where we get creative with how we're sharing some of our successes with our employees and getting everybody aligned. The CalSavers, there's no financial advisor support, so there's no education meetings, no questions answered around where to invest the money or that sort of thing. Where on this, you have the ability to tap our office and access, and then vesting requirements. In the CalSavers, that's just automatically in the 401k, you can actually set up your contributions to have vesting as well. So for me, it's really important for us to have account managers that stick around here a long time. And so we're willing to put in a match and to contribute back to our employees. But what we do is we require vesting. So a lot of times a very basic vesting schedule is the employee has to be here for 3 years to keep the employer money versus the employee money. And what that does is that pays me back for the onboarding, the recruiting, all those costs that come into turnover. So it's a really creative way of saying, hey, if you have too much turnover and that's hurting your business, I can show you a way to eliminate some or all that turnover, and at least bring people in or keep people attached to your business for 3 to 4 to 5 to 6 years. right now the talent pool has been crazy. We continue to get in these bidding wars for talent, and it's been really hard to do. That vesting schedule is a creative way to say, hey, I'm willing to pay a little bit more, but only if you're going to stay. And you can do that through this vesting schedule in the 401k plan. And so that's something as we get into creative and we say, how do we differentiate ourselves from the competitors? That's a way to do so. And then the employer administrative tasks, we support you on that. On the CalSavers, you have to go in through the CalSavers website, opt in or opt out of the plan. And so you're kind of on your own on that. So it's just another benefit to having us, but really understand those deadlines. If you have over 100 and you're not offering a 401k plan today, we probably should talk like yesterday. June 30th is right around the corner too. So if you have over 50 employees and you're not offering a 401k, then that's the case. And then you're really going to have to do it, any employer over 5 employees going into next year. So rather than going to your employees and saying, hey, we have to do this now, so we're going to do it, I think it's a nice gesture to go to them and say, hey, this is something exciting we're going to offer, and be ahead of the curve there. And if you have a plan and you haven't looked at it in 3 to 5 years, and you're saying, hey, you know what? I'm looking forward to benchmarking it, or I'm looking to see what kind of pricing this is versus what I have. We're happy to do a benchmarking for you as well and just show you the comparison between the two. As we go into the next page, you're going to see kind of those qualified plans that you must file an exemption for from CalSavers. So if you have a 401k, a 403b, 403b simplified pension plan, which is a set plan, a simple plan, those are the ways that you can file for that exemption. And we're going to send out this, but you would go on and you'd say, hey, even if you have a plan, you still need to file for this exemption. So that's a second point here, that if you say, hey, you know what, I have a plan, I don't want to do anything with our plan, just remember that you still need to go on there and file an exemption. And so that unless you file the 5,500, that's something you still need to do. As we go to the next page, you're going to see the kind of the next steps. If you want to know more, you could schedule an introductory call and we can walk through kind of the finer points of the plan. It doesn't cost you anything to go through it. I always say a good conversation where we really start to understand your business and we can start to plan, like, hey, we've dealt with over 200 employers for the last 20 years. So we understand really how to dial in your business based on leveraging the 401k to its fullest extent. And in fact, that's what I lecture at Long Beach State for. The second part of that cost comparison would be just looking at your current plan versus what this would look like from a standpoint of fund selection, cost comparison, administrative functions, and then fiduciary functions in getting some of that set up for you. And then you're going to see kind of some of the basics of what we need to get started on that. But the final piece of that before I go on it is you may just want to have a benchmark. And the Department of Labor a lot of times will come in. Walmart's been sued for this. John Deere, major brands have been sued for this by just not even looking at their current plan for over 5 years. So if it's been 5 years since you priced out your plan, I'd say at least put it in your files that you came to us. We benchmarked it. If it wasn't attractive or you felt like it wasn't compelling enough to move, at least you have that in your file from a compliance standpoint to say, hey, you know what? We looked at it. It just wasn't the right fit for us. So that's something as a member benefit to chamber members that I think is powerful without having any cost involved. And any of the existing plan, now this is where it starts to get daunting. Like I said, usually I say, let's start with a call before we get into some of this. And then as we start to get into that, that's where we get into all those kind of steps of what we need. But we're not just saying, hey, let's have a conversation. Oh, you should go here. We're going to take you through a pretty detailed document checklist so that if nothing else, at the end of the day, you know what you have and you know how good it is. And as we go to the next page, you're going to see kind of the membership benefit to it. If you have any questions in terms of joining the chamber, I would contact Natalie. She would be able to walk you through any sort of membership, or you are talking to somebody that says, hey, I heard about this, but I'm not a member today. I would just refer them to Natalie. And if you're looking at on the next page, you're going to see Megan's contact information, which is if you're looking for something from us, reach out to Megan, set up an introductory call. We can do it either a Zoom or we can meet at your office. The nice thing about this map is all of you are based out of Long Beach, which we really like because we like supporting Long Beach businesses. So any questions there, let me know. I'm going to go into the Q&A right now and see what there is. Hopefully, in your first question of what are the benefits of using a MEP for a small business, I answered. If I didn't, just ask again. And the second question of how easy is the MEP to use, it's actually pretty simple. We handle that. We come out and walk your employees through how to do it, how to get online, how to set up this enrollment. So our onboarding team or implementation actually walks your team through and all of your employees through it on a personal basis. Onboarding process, if you start today, it usually takes, I'm going to say 4 to 6 weeks. And the reason for that is we have to set up the plan documents. We have to meet with you. We have to educate your employees, and then we have to set up the payroll and that sort of thing. So it can happen faster, but we generally say 4 to 6 weeks. Any other questions? Good questions so far.
Yeah, I don't see any in the chat, but please put them in the chat or the Q&A. Oh, here we go.
Trent, are there some metrics or scenarios you look at in a business when you're helping a plan determine what plan to choose? Yeah, 100%. That's where it's super helpful for me to know your individual business. And what we do is we actually take you through and we show you all the businesses that are in your kind of your benchmarked area. So we look at industry sector, size of businesses. We look at size of your plan, and then so we'll benchmark it. And then you and I generally have a discussion around kind of what are the main, goals of the business? How are you meeting those goals? And then how can we leverage the 401k most to do so? The cool thing about the MEP is it's not everybody's the same. So we get to really dial into your business and say, here's exactly, what's going to fit the best for your business rather than just kind of one size fits all. You can do the Roth 401k. So that's another question that I just got asked. And I actually right now with our tax rates being probably the lowest they've ever will be in the next, I don't know, at least 3 years. I would say that the Roth 401k is very valuable. In fact, myself, I have 100% of my contributions going into the Roth 401k. I'm not contributing to the traditional 401k right now. A lot of times plan sponsors just don't adopt that because they think it's confusing. But when you really looking at compound interest for a younger employee and for somebody that's getting closer to retirement and showing how they won't have to pay taxes on that money ever again, the Roth 401k can be very, very compelling. And the nice thing about the Roth 401k in this plan is there's no income limits. So in a traditional Roth IRA, you have income limits. Once you make a certain amount of money, you're not allowed to contribute to a Roth. In the 401k, there's no income limits. And it's not just the 6,000 that's in an IRA, it's actually the 16,000 or the 19,500 that's in a 401k. So for those that are high income earners specifically, and I'd say anybody that makes less than 50,000 in the United States actually doesn't pay taxes. So for low income earners, they could actually put this money in, let it grow, and never have to pay taxes on that money. So it's a pretty attractive option there. Any other questions? If you do or something comes up and you want to, you'd ask Natalie. The next question is discrimination testing on the MEP or pooled? It's on your own plan. It's not pooled as part of the entire MEP, so you don't get hurt by somebody else. Your discrimination testing is set up in your own plan. Good question there. And Alvaro, if you have more questions, don't hesitate to reach out and just keep firing away questions. Happy to help in any way. All right, Natalie, anything else?
I don't see any more questions coming through, but thank you so much, Trent, for taking the time. As a reminder to all of our attendees, this will be made available on our YouTube channel if you want to revisit it and look at any more additional details. And as a reminder, we also have another webinar with Bryson this Friday, June 11th at 10 a.m. It will be pretty much the same information, but you're welcome to join us again. We'd love to have you. And thank you again, Trent. Thank you, Megan.
You
We
got it.
appreciate it.
And I would just add to that, while it's fresh in your mind, if you want to pick up the phone and use that number now, call us. We're available. So we're happy to chat even now. So a lot of times you don't want to go away and then try to remember it earlier. So it's fresh in your mind. Give me a call. I'm here waiting for you.
Love it. That's great. Thank you, Trent. Thank you all. And thank you for joining us today.
Thanks, Natalie.